Hey, good morning, guys. This is Greg with Ideal Trading Ideas. And as you can see, we have our Robinhood portfolio up on the screen, and we're going to be talking about Hanesbrands Inc. today. This is going to be our trade idea number 20, and it's going to be a cash secured put option, right? So we're going to run through the charts really quick. Right now, Hanesbrands is $18.36 per share, up 28 cents or positive 1.55% for the day. Nothing after hours. We're going to run through the charts. 1 week chart says that we're up 33 cents or positive 1.83%. 1 month chart says that we're down 4 cents or negative 0.22%. 3 month chart says that we're down $2.91 or negative 13.68%. 1 year chart says that we're up $3.31 or positive 21.99%, and the 5 year chart says that we're down $8.50 or negative 31.65%, right? So how do we do these cash secured put options? Well, we're going to click on HBI options or trade HBI options. And as you can see, we have the option window right here, right? Or the option chain, right? So we have buy, sell, call, put, and we have expiring today, July 3rd. So the first thing we want to do is change buy to sell. So we're going to click on sell. We're going to change call to put. So now we're going to be selling a put, right? And we want to change the expiring date of July 3rd till August 6th. So we pushed it out to next Friday, right? So as of right now, the current price to purchase Hanesbrands shares is $18.36, right, per share. So I always tell you guys, look to purchase 100 shares. So when you're doing option trades, that's exactly what you're doing. When you buy one contract, you're actually purchasing 100 shares, or the attempt to purchase 100 shares or sell 100 shares. So when you're doing selling puts, you're basically saying, hey, I'm willing to purchase shares at a certain price, which is the strike price, right? So in this case, you're saying, hey, I'm willing to buy Hanesbrands shares at $18 a share or 18 strike price, or $17.50 a share or strike price. And these are the amounts of premium that they're willing to pay you, right? So for saying that you're willing to buy at 18, they're willing to give you 60 cents in premium. So if you did one contract, it's going to be 60 cents times 100 shares, or $60 up front. Same thing right here. If you said you're willing to buy at $17.50, then they're willing to give you 40 cents up front, or 40 cents times 100 shares of $40, right? So when doing a cash secured put option, what you have to know, what you have to remember is that you're going to be putting up the cash collateral to purchase those 100 shares at that strike price. So if you are saying you're willing to go with the $17.50 strike, you're going to be putting up $17.50 times 100 shares, which is going to be $1,750. The same thing if you go with the $18 strike, you're going to be putting up $18 times 100 shares, which is going to be $1,800. Now, when you do the math, you automatically see that if you go from $18.36 to $18, that's going to be a $36 difference, and that you're going to save because you're saying you're willing to buy at 18. Same thing if you go down here. You're going to be saving some money from $18.36 to $17.50, right? If you choose the different strike price. Now you could go lower, 17, 16.50, and it is all up to you, right? So what you have to see right here, we have $18 strike, we have break even, 17.40, we have chance of profit, 67.55%. The change in percentage is negative 14.29, and then the change altogether is 10 cents, showing you that it went down 10 cents, and then the premium, right? So as of right now, when you look at the break even, that's going to be your strike price of $18 and the premium put together, which is going to lower it down to $17.40, which means if you did purchase those shares, you could go down to as low as $17.40, and that would be your break even because of the money that you already took for the share. So that's going to be your real average cost. Robinhood is not going to show that to you once you buy the shares. It's not going to show you that $17.40 was your average cost, but you have to have like a spreadsheet or something wrote down, or just write it down. $17.40 was my break even. So anyway, how would you do this cash secured put, and why would you do the cash secured put? Well, once again, you would do it because you're trying to either get the shares at a lower price, or you just want to collect those premiums. Now, $18.36, I don't think I would possibly pick an $18 strike for August 6th. I would probably go down to $17.50 because there's a 73% chance that this is going to be profitable, and I'll go ahead and take the $40 for the trade, right? So what you would do is just make sure that you have the $1,750 inside your Robinhood trading account, and then you're going to click on the plus sign right here. It's going to say short put, 1750 put, -40, and it says total credit is 40, right? You're going to go down real quick just to see what it's saying. Expected profit and loss is positive 40, which is the 40 cent right here times 100 shares. It's showing you HBI price now is 18.36. Max profit is 40. Max loss is 17.10. And then the break even is 17.10, right? Now, why is it saying 17.10, right? So it says 17.10 because the 1750 and the 40 equals 17.10, right? When you minus it out. So, and it also has max loss of 17.10, meaning if the price went all the way down to zero, which it will not, the price of the shares goes down to zero, then you would lose your entire $1,710. Now, the chances of that happening is slim to none. And I'm not telling you it hasn't happened, but we're talking about a huge company, Hanesbrands Inc, which is not going to happen. Anyway, you would get paid $40 up front for this, and this would last until August 6th, right? So we just click on continue to kind of show you exactly what's going on. Remember, contracts, one contract equals 100 shares, which means if you go 2 contracts, it's going to be 200 shares, 10 contracts is going to be 1,000 shares, right? So if you put one in as so, and remember, the limit price is anywhere from 35 cents to 45 cents. The in between is going to be 40 cents. They're saying minimum credit of $40, right? So once you click on review order, it's going to go ahead and go through. Remember, we're not in the market operating hours right now. It's only 7:15 in the morning, but you would go ahead and get paid that $40 up front, but it also would take your $1,750 and put that to the side. Or if you're willing to go at 18, it'll give you $60 up front and then put that $1,800 to the side until August 6th, right? So let's say it doesn't go down to the $18 mark by August 6th. You will receive your $1,800 back or $1,750, whichever one you choose to pick. You receive that money back, but you have already been paid this premium up front. So if it was 18, you're going to receive the 60 up front, and then upon expiring August 6th, if it's not down at $18, you receive that $1,800 back. Same thing with the $1,750, right? So this is why they call it a cash secured put, because you're putting cash up in order to receive this premium up front. So you're hoping that it does not drop down. Now, most people that actually do these cash secured puts are wanting to purchase shares of the stock for these lower prices. So they're hoping that, hey, by August 6th, it possibly does drop down to the $18 mark or the $17.50 mark, because they're going to buy it at a reduced amount, right? So they're going to buy it, and make a little bit of money from it, right? The $17.50 is a better buy than $18.36, right? So not only did they buy for $17.50, they picked up some money for saying they want to buy at $17.50, right? So once they've done that, they would then just start doing covered call option, because now they own the 100 shares at the lower price. So that's what happens if it goes down and actually touches the price. You're going to now own the shares, and then you would start doing covered call options to start making money from it. But if it doesn't drop down to the $17.50 or the $18 by August 6th, then once again, you would get your money back, your cash collateral that you put up, and you would just keep your premium. Hopefully, I've showed you guys how to do a cash secured put in the way that you would understand it. Remember, please like, comment, subscribe to the channel. I really do appreciate all the love and support you guys have given me. Hey, you guys have a great day. Bye.